Welcome to Real Wealth, Real Health, the show that empowers you with insights, information, and inspiration to achieve your version of financial wellness. Learn how to balance living a full life today with planning for the future. This podcast is brought to you by Alpha Investing, a real estate-centric private capital network that provides exclusive investment opportunities to its members. And now, here are your hosts, Ada Piederico and Daniel Coca.
Hello, welcome to another episode of Real Wealth, Real Health. Our guest today is Julie Hawley, the founder of 3 Keys Investment, which is a company that helps people find their freedom through multifamily real estate investing. In our conversation today, Julie really explains why it's important to keep investing even when economic conditions seem less than ideal. And while it may seem prudent to hold off on investing in real estate in the midst of this current economic climate, Julie argues that you can invest wisely no matter what's happening in the markets, and that if you don't invest at all, you are losing money. In our episode, Julie shares her perspective on the ways that rising rates are impacting investor behavior in both residential and multifamily real estate. And she explains how she's continuing to find opportunities, overcoming fear and doubt, and she shares her best advice for staying grounded, becoming a more confident investor, and prioritizing the things that matter most to you. This is a very insightful and inspiring conversation where we dig into mindset, economics, real estate, and investing, a truly holistic approach to building wealth. Hi, Julie. Welcome to the podcast.
Adapia, I'm so happy to be here. I'm like, we should have just been recording all of our off-air conversation.
I know, we should have. I know. Well, it also gave us like such great inspiration and insight for like how to start the conversation and where we want to get it going. And so let's start. I'm actually really curious to hear, in your world right now, like what you're seeing with real estate, with the investing side of what you're up to.
Right. So I invest in large scale apartment complexes across the country, not in any central location. It's very market dependent. And so that really gives me a different scope of what's taking place, because you can really start to see the patterns as to what is shaping up out there, and hearing the chatter and the conversations, and coast to coast, east, west, north, south, it doesn't matter. People are shifting their investment criteria right now. And there is definitely a shift taking place. So if we were to backtrack, let's just go back 4 months ago. Let's just say that we were under contract 4 months ago on an asset. The seller had full control and retrading, which means renegotiating the original price because some new information has presented. And now, as a buyer, it's like, ooh, you know what? That roof, after inspecting it, it is not what it's cracked up to be. We need to retrade. That was so frowned upon. And if you were going to retrade, you're going to get a hand slap. And the market was so fiercely competitive that could actually knock you off kilter and maybe put you on a little bit of a blacklist or the naughty list, however you want to look at it. Right. Yeah. And now I don't know about you, but I am hearing people, I just heard, we just retraded this and we're $600,000 reduced.
Wow.
And they're citing all of these type of things are taking place because of the interest rates.
Right. Which is what a lot of people were expecting when interest rates increased, even though nobody, even like all the smartest economists and, the bond market, all of them, they didn't expect the Fed to raise rates this fast and this steeply. So this quickly. So we've just had this just huge spike and nobody really saw it coming. And so, but there is a lag, right? Like it didn't happen right away. Like this change in the market in acquisition, and it didn't happen right away. Like, I feel like it's just been, like you're saying, like 4 months ago, that wouldn't happen. And now it seems like just in the past couple of weeks, we're even seeing it in the residential housing market, and you're seeing homes staying on the market for longer, or there's like, I think
Redfin just came out with something that said that there's the steepest number of drops in prices on homes for sale since 2015. So it's just this seesaw. It's just like up and down, like it's a
Really
seesaw
is.
happening.
It really is. And actually, so when you speak to the residential, my husband, he's all residential. That's his wheelhouse. And I'm commercial, right? But I do watch it because I used to be residential. And I mean, like it's his thing, and I'll always have an arm just looking over.
Yeah.
But yeah, you're just seeing that price reduction. Now, what's interesting is that sellers almost universally I'd say actually the residential sellers are starting to catch on faster that, oh, wait, we've seen this before. We're ready to reduce our price or completely remove ourselves from the marketplace. Because a lot of people have realized, I spoke with some local friends who invest in small multi, and they're literally like, they had 2 duplexes on the market, and they realized they're like, we missed it. So we're just going to keep them.
Wow.
And that was they're very savvy investors. And that was their personal opinion on what was taking place in our market. Was like, okay, well, we thought we just missed it. Those rate increases came out right when we put this on the market. They're sitting, we're going to remove ourselves from the market. So it's interesting as you see people literally either removing themselves from the market or saying, okay, no, I want out. If they're investors, I want out now. And so I'm going to have to reduce. But on the larger multifamily, the sellers seem to be lagging. I'm starting to see some softening on this.
Right.
But in general, the sellers are still thinking like, no, some hedge fund's going to come by us. Blackstone's going to come by us. Somebody's going to come by, somebody's going to want this just as a, capital preservation, tool in their toolbox or something.
Right. I mean, I did see that because the US dollar is so strong. It was actually surprising. Let me say it this way. The US dollar being so strong, it actually surprised me to see that there's more foreign buyers of real estate now than a couple of years ago, which would seem odd on the one hand, because the US dollar is so strong. And so that foreign currency is buying less US dollar denominated assets. But we still have the most stable currency because of what's happening. And so you have all this, like, it's scary. So hard to keep track, which is what we were talking about before. Like, how do you, when you start to see how everything affects something else like this, it's like a spider web, really. It's the only way I can think about it is like, it's at least hard for me. And I'm by no means an economist, but sometimes you can see a direct correlation. Well, this causes that, but then other things happen that might seem like, oh, that's strange that that's happening. But then there's a reason for that because, and then it's like, well, what's the answer? And and it's really hard to try to like keep track of all of it because every time we come into a new cycle of some kind, and they seem to be accelerating these cycles, like there's a different economic environment, it's always unprecedented. And so it's like, I know that there are some things that hold true, and yet there's always something different that's happening. How do we even try to keep track of it? How do we play this game? How do we make decisions when all these things are happening all the time and half of them don't make sense?
What's interesting about that is that it feels very new to us. But we were talking about history and you're getting more into the history element of things. And when I used to homeschool my kids, we listened to this Susan Wise Brown. It's called The History of the World. And it starts at the very beginning, ancient history, and then it comes to current times. It ends in right after 2001, when, the terrorist attacks. That's like the final point. But it's very interesting when you look at a high level. It's more like it's like a survey class in college, and you're seeing all of this does have a point, I promise everyone. But you're seeing you're seeing Asia, you're seeing Western culture, you're seeing Asian culture, and she does a great job of saying like, over here this is what's happening, over here this is what's happening. And as if just listening to those, and it's hours worth of listening, and it's very worthwhile. It just gives you this understanding that there really isn't anything new. So we assign new definitions, we assign new terminology. And yeah, we do have new ways of going about it. So now we have cryptocurrency, we have these credit cards, we have this digitized world, right? And it seems so new, but the principles, the underlying principles are always unchanging and always the same. And so when you start looking at the economy, for those of us who aren't economists, when I look at things at that top tier level and just say like, okay, what's the common thread here that would be a historically common thread?
Right.
You can start to, I feel like that has helped ground me a little more. And I know that that sounds really silly, but I think I've also been listening to a lot of Jocko with my 13-year-old son who loves his books. And in listening to that, he's always reminding me, like, Navy SEALs always keep it simple, keep the plan simple,
Right.
And so if we go just to the simplest form of things, it could provide some solace and maybe some clarity. We do have to get into the weeds, to kind of find some solutions perhaps, but if we can actually like identify the overarching, okay, here's a common thread, now we can catch our breath, and now we can like start doing the like technical surgery stuff.
Yeah. Yeah. No, I really appreciate that. I think it's really important because it really is a matter of grounding, because there's so much information out there and it feels like there's so much to consider and more to consider every day. And things come out of left field and we get sideswiped. And so where do we find that baseline that we know that these principles always hold true? So I wonder, like from the perspective of a real estate investor, let's just talk about multifamily, because we both do a lot of multifamily. Like, what would that look like? And I ask because when you said like you have sellers who are in my opinion, I heard that and I thought that's a little bit of wishful thinking to think, well, because there's Blackstone or whomever, they still have they still
have to report.
They're not just gonna buy it. Like there's still cap rates and there's still things that they underwrite. And so they're not just gonna come around and buy it. And they're probably not the ones that were just throwing money around anyway. That's an unsophisticated investor that just throws money at something. So, I think that if like the holding out is the behavioral aspect. And so what do we want to ground into? Because everything's transitory too, right? Like everything's transitory. And one of my favorite things about real estate is that with a long enough time horizon and the illiquidity premium that we get, we're actually able to be like saved from our own emotional whims of buying and selling because we're freaking out. So how do we ground ourselves right now with this transitionary period we're in?
I love that, because we really have just been a bunch of high school seniors having a great time, celebrating, carefree, because appreciation's got our back, yo. And we're just gonna have like anybody could be successful, right? And so there were so many people that were, didn't have the savvy, don't have the know-how, but they were being rescued by appreciation and by these amazing markets and everything and low interest rates. There's so many factors that were helping them out. And so as we move forward, it is absolutely critical to be investing. And so we were talking about this off air. I've been creating a lot of content for my investors about now is not the time to be on the sidelines. Now is the time to be on the field playing. Now is the time. And we're not waiting for the quote 2011's coming again. No, we'll buy on the downside, we'll buy on the upside, and we'll buy in every single market because we don't stop. The principles of investing in real estate are unchanging. When we purchase correctly, it's going to be a solid investment regardless of what the economy is. And if you understand how to execute on that. And so, things that we're looking for, however, like I'm not going for heavy lifts right now. I just, no thanks. I'm not going to take the heavy lift right now. I am involved in new ground up development, class A luxury housing. So it's interesting to see like, okay, where are we going to be positioning ourselves in the market? Okay, well, we have a complete shortage of housing across the country.
Yes.
We could argue that maybe Austin, Texas has a lot coming online. Okay, maybe I could argue that. But in generally speaking, we're undersupplied. We need more housing available. So, putting new units online is going to be an asset regardless of where the economy is headed. Now, if I'm going to go in and I'm going to do a heavy lift on a Class C value add property, that's a heavy lift, that's not going to have the returns that I am looking for my investors should the economy turn, because everybody's going to be shifting in their housing as we have an economy that starts to constrict a bit. Now we're going to have people that, okay, well, I'm not buying a house. So you know what, honey, we're not buying the house. Let's get that really nice apartment so it can just feel homier. Let's do that instead, since we can't afford the house. Or right. So the thinking behind the residents that are moving into apartments and the movement within the apartment classes is very interesting as well. And that has to be considered. And so opportunities for me, it's where is it stable? Right now, I'm not looking for some crazy play. I'm personally looking for where is it stable? What's my runway on our financing? So that we have the runway that's going to withstand, and how are we capitalized for everything that's going to take place. And when we take these things into consideration, we can move forward confidently with our investing. But people on the sidelines, they're losing. Like if you're on the side, if you're listening to this right now and you have money sitting on the sidelines because you are afraid, you are literally losing money. That $100,000 that you might have ready to invest at the end of the year is going to be worth $92,000 or less, all because it's sitting there. So it's like you're either gaining and growing or you're losing. There's no in between right now.
Yeah, absolutely. Yeah. And I appreciate like the way that you think about things, because if there is that fear, gosh, I'm afraid to make the wrong investment, then I think, the answer to fear, which is emotional, obviously, like maybe some irrationality there, is to just kind of dive into the mental side of things, the rational aspect, and look at the underwriting and maybe ask the questions like, why does this make sense? And so like the number one thing, and you said it right at the beginning, is we're still so vastly undersupplied. I mean, like we're nowhere near in terms of housing, like whether it's multifamily or single family, whether it's rental or personal residential, there's still a massive undersupply. And then because of some of this uncertainty in the market currently, you have home builders that aren't even they are not planning to necessarily bring more online faster because they got caught in the last downturn. So they're a little hesitant to bring a bunch of new supply online at the same pace that they were doing it before. And so there's this, I think it's like this overarching hesitancy. And yet what it's causing is a consistent lack of supply. And in addition to what you mentioned too, the interest rates are really the thing that is driving pretty much everything right now, because as these interest rates have gone up, the affordability issue has gotten worse. And so, I was having a conversation with an investor the other day, and they were saying, well, why would somebody rent if in this one area when they could buy a home, like, let's say like the price per door in this property is like, call it 160, but they could buy a home for 220 or 230 or something like that. And I said, well, and so the mortgage, and I said, yeah, but I understand that. But first of all, there's renters by choice and there's more of them than ever. Yep. I mean, so many more than ever. And secondly, you still have to put a $40,000 down payment on a $220,000 or $230,000 home. And so that's the other piece of the pie, which is where's somebody going to get that money unless they exited something else or they've been saving, which hasn't really been the case. And so even though it might seem to some of us who think, why would you rent when you could buy something over here that's so much cheaper? Well, it's also not the same thing. Just because we're buying a price per door at 160 is very vastly different than buying a home over here for 220 or 230, but it's also behavioral. I mean, everything shifted. And so it comes down to supply, it comes down to interest rates, and then it also just comes down to really personal lifestyle preferences.
Yeah. When you're looking at, those are all, I love that. All of it, 1,000,000%. And then when you think about, if we're investing, we need to be investing wisely, and interest rates are only one facet to making a good solid opportunity.
Right.
And so when we're looking at an investment, we're not just looking at, because we could have a really great investment with a really low interest rate, but maybe the financing is really weak, or maybe the team behind it, the sponsor team, maybe they're weak. Maybe they're not going to be able to execute. And so like the interest rate is one factor. And when we look at historical interest rates, my good golly, our rates are still so freaking low.
Yeah.
And we have to keep that in mind and remember that, the last recession people are saying that this is going to be they're saying what we're going into is akin to 1981. I don't know if you've heard that. I've heard a lot of references paralleling those two recessions, because it was brought on not because we were going to go into a recession, but it's more induced because of people's behavior.
Right.
And so we have to be mindful of not making those fear-based choices, of guarding our mind and saying, okay, sure, it looks like this is black and white, like little Wizard of Ozzy, but we can go into Technicolor and it's all going to be okay. It's going to work out. But knowledge is power. And we were talking about that and how critical it is to make sure that we're educated so that we understand and we're confident. That education builds our confidence in taking that very next step. So like on your deal that you guys are, currently have, like, man, your investors, the more knowledge that they gain, the more confidence they're having. Just like my investors, is like, okay, I want my investors to be so confident in whatever I present to them from now until the end of the year, especially. But that's a short horizon. I always want them to be confident, but in this time of uncertainty, I want to feed them knowledge so that they're like, okay, we're ready. We're not going to be on the sidelines losing money.
Yeah. No, it's the confidence piece. So on the confidence piece, I think so much of everything is based on our confidence, and the knowledge gives us confidence and the experience gives us confidence. And I find, whether it's me personally or there's like a lot of people that I talk to, and lately it's like a lot of women. I'm really like engaged with women and getting them to get beyond maybe some mental barriers about what they're capable of doing, of being investors, of understanding certain concepts, because they're really not, it's at their core level, like you were saying, like the baseline things that we really need to know, they're not that difficult to understand, like truly. And so what I found in my own journey of like, the more I get educated about something that I thought maybe a while ago was like, oh, I could never understand that, like really complex economics, let's say, or how things work, or historical economics. And like, the more you get into it, the more you realize, oh, it's not that bad. Oh, I got this. Like, oh, I can do this. And then the confidence comes up, and then the confidence builds to allow us to look at a deal and say, you know what, I actually know which questions to ask and why I'm asking those questions. So I'm not just looking at what's the rate of return, right? Like, what's the IRR? Like, no, that I'm not actually interested in what the IRR is. And so that level of confidence, I think, is also the antidote to the fear of, oh, everything's really turbulent right now. The stock market's going down. And, people are like, the media is telling us all these things about how to be afraid. And so I'm going to sit it out. And then you miss out on really solid opportunities because you don't have the confidence, because you don't have the knowledge. And all those pieces go together so that the fear piece is actually like, oh, there's that fear thing again, but I'm not going to listen to it.
And it comes up, and I would say maybe we're in a similar position on that, because I don't know that you did this, but I think I spent 2 weeks. I've mentioned this to my husband a couple of times. I'm reading Untethered Soul right now, which is a fantastic, everyone needs to read it. It is like,
it's right here. I have this book. It's on my bookshelf. It's such a wonderful book.
I think everyone needs to read this book. And I think actually really right now, everyone needs to read this book because it really helps you understand yourself. And I realized actually through reading this is I had my head in the sand for like 2 weeks. 2 weeks. I should have given myself like Mel Robbins. I should have had like a 5-second rule on that and all of that. But I like for 2 weeks, I was like, what's happening in the marketplace? And so if you're listening to this and you're like, it's scary out there and all of that, I mean, like, to be honest, everyone's making their adjustments right now, even experienced people. But and then I kind of got a Three Stooges little, slap across the face, like, no, wait, what are you doing? You know what you're doing, but that came through knowledge that I was like, started doing some research because I don't like fear. I don't like fear having control over me and over my life. Like, I want to punch it in the face. It's just reality. Like, get out of my life, fear, because you don't bring the best into my life. You rob me of joy. You rob me of the stillness that I can have and choose to have. And so I'm not going to choose to invite you into my life. And I am going to punch you in the face by getting knowledge. I'm not a violent person, but it's like, you just don't want something like that controlling your life, because it's not going to enhance your life at all. And so as I started gaining knowledge and doing more research, because I'm not an economist, and so looking at people that I can respect and say, what are they seeing? Oh, okay, this isn't that bad. And then looking at our own personal history. So, I mean, I was born in the 70s. Like, I've lived through things. I've seen things. I've lived through a war. I'm like, you know what? We're all tougher than we give ourselves credit for. And we've all lived in, not just lived, but we've probably even thrived through times of uncertainty. And so going back to that and saying, what am I made of? And what got me through that? And how am I going to apply this to our current situation? And gaining that knowledge, finding people that have the knowledge that's leveled up from yours, that might not be what you want to hear, but that will educate you so that you can at least like kind of like okay, it's like a diagnosis when you go to a doctor that maybe you don't want to have. It's like, okay, that sucks, but now we know what we can do about it. And here's my personal treatment plan.
Yeah, exactly.
So, I'm going to just add in there, and then I'm going to catch a breath and let you.
No, there's, you brought so many good points up. Like, actually the analogy with the doctor, it's like, it's always worse when you don't know what you're dealing with. And then when you do know, what you're dealing with. So now you can have a plan of action. It's really so much the same thing. And like getting that knowledge base from people who dedicate their whole lives and decades of it at this point, right? Some great economists and like having different perspectives, because there's also a lot of opinions there, but like the fear thing for me, and I know we think a lot of like, I mean, you have your podcast is called The Conscious Investor. So I know obviously you're very like deep into this stuff as well. So like, there's the intuition piece, right? There's the spirit piece. There's the, and heart and soul piece of it. And then there's the rational piece of it, which is that combination of both when we are investing. I find that to be of such importance, like, and fear being such a primal emotion. And most of the time it's driven by a thought, because true fear is only fear of heights, or fear of falling, rather. I think it's like fear of falling, and loud noises are only two biological fears. All other fears are actually thoughts that we've been taught over time and conditioned. So knowing that, then, everything else is something that, at least for me, in my worst moments of when my stomach is in a knot and, when I want to like completely capitulate on something like relative to investing, where I have to take like several deep breaths and usually several days, and then go back to the information, go back to the knowledge. And a lot of times the historical that we've been talking about is really helpful, because you see that just like in nature, everything's cyclical. It's a cycle. There are cycles. And so you can say, like, if it's the stock market, right, it's just a bear market. Seen it so many times, right? And in real estate, honestly, right now, it's not bad. Like, let's be honest, like, it's not bad. And somehow there's this transposition of what's going on in the stock market and in like crypto markets. Like, it's getting transposed onto real estate. I was talking to all
investing is trash now. Apparently it's like, no,
this is why we invest in real estate. I don't have to talk anyone off a ledge of my investors. They're getting their distributions. Everything is on track.
Yeah.
There's reserves. There's like, it's like, I'm not talking anyone off a ledge,
Mm-hmm.
but they might be sitting out and because there's this other giant atmosphere of fear. And so to your point, let's bring it back to some like rational analysis. Let's look at our plan, right? Like even like, what was my plan at the beginning of the year? What's my 5-year? What's my 10-year? You know, whatever it is, come back to center in yourself, come back to your financial plan, go look at the analytics of something. And if you have money that you want to invest and you come across something that looks solid, then really deeply explore it. Don't let fear be the thing that sits you on the sidelines.
You know, Michael Neal, and I'm sure you've read his books, his work. I love Michael Neal so much. But
I actually haven't. No, what's his book?
So oh my gosh, I highly recommend Super Coach.
Oh, okay.
And actually he has a whole entire section. One chapter is on money mindset.
Okay.
But I highly recommend this book to anyone that is looking to, you know, just thrive, live a thriving life. He's fantastic. But on his podcast, it's called Caffeine for the Soul. They're very short vignettes, basically anywhere from 5 to 10 minutes. And he regularly talks about that we are a product of our thinking. The world around us is a product of our thinking. And so, sure, there could be a bear market in the stock market, but how we're going to receive that and internalize that and then take action upon that is all based upon our own thinking that surrounds that. And so it's critical that we take control of that brain space so that our actions are aligning, because if we have an overarching vision for where we want our life to go, and I am confident, having listened to your podcast, that, you know, that you amazing listeners are thinking bigger than just day to day. And when we can remind ourselves, oh, wait, this is right now, this is a day to day, but this is where I'm headed. And of course, naturally, there are going to be some bumps along the road as I head there, but that's okay. And if your eyes are set and your thinking and your visualization is set upon that final product, that grander destination of your different identities and who you're growing into and what you're contributing to the world, these circumstances that surround us are just circumstances. And you're going to make choices that are aligned with your grander thinking versus now. So like just controlling that thought process is so critical.
Wow. I love that so much. That's the grounding. Like that is the grounding.
Absolutely. Thank you. Yes, that is the grounding. And I will tell you, like, I think that's what brought me out of that 2 weeks.
Yeah.
Was I went back, here they are. I keep them in my planner. I have paper. I don't know if this ever goes like you do clips, but if you're listening to this, I am holding up my goals that are double-sided, but I set out, I have a plan, and they're not goals like, okay, XYZ necessarily. They're like, what's the life vision?
Yeah.
What's my life vision about? Where do I want to see? My kids' ages are written here. What we want to do. Like, well, they're going to be that old. What does that look like? And so looking at life on a grander scheme of things, and then going back to it, not just setting it and forgetting it, but revisiting that on a day in, day out basis, grounds you.
Yeah, absolutely. Yeah. And like to your point, right? I was thinking when you were saying like you had those 2 weeks, it also occurred to me to say, it's okay to have those 2 weeks.
Right?
Right. It's okay. It's okay to have a bad day or a couple of weeks, or even like sometimes we get in like a funk. Like it's okay. You'll come out of it, right? It's like again, like you come out of it. I think the really important thing there is that awareness. And I don't know if you do this. I do this a lot when I find that I've found myself in some kind of a funk or weird mental spiral. And sometimes I can find, like, sometimes it's like a couple hours and sometimes it's a lot longer. I actually take a step back from it. And I think like, what is behind this? That is, why am I feeling this way? Like, cause usually it's like, it's emotional, or like, why am I thinking this? And then it's, where did it come from? And I have to trace it back. And it's not that hard to trace back. I think, at least for me, I do this all the time. And then I can identify like, oh, maybe it's a comment that somebody made and it triggered something much deeper, or it's that I've been spending too much time on finance Twitter or, wherever, or, what is it that is actually the root cause of this? And sometimes it's something bigger, but most of the time it's something triggered a fear in me, or I got caught up in somebody else's fear. It's not even mine.
Yes.
It's mine. I don't even believe that. Like I said, I'm not
Right.
talking anyone off a ledge. What am I worried about? Real estate's
Right.
great. Like,
Yep.
and so I have to get, and that's how I sometimes ground myself too. It is like, what am I caught up in? And that really has also helped me. So I do that in addition to the grounding in knowledge of, okay, here's all this fear FUD over here. Let me go find some real information that helps me contextualize it and say, there's nothing to this that I should actually concern myself with.
I love that. I definitely can relate to this. I spend a lot of time on LinkedIn. It's the equivalent of Twitter, right? Like LinkedIn is my happy spot, and the conversations are so elevated. And
Yes.
I was definitely, and that was where, when I was going through that thought process, I'm like, where is this coming from? Oh, people are chattering about this on LinkedIn, and it makes for a really good conversation, but I got overdosed in it. And I love that you said, like, it's okay to give yourself space to breathe. And that is something where it is a learned behavior. I thoroughly believe that's something you have to learn. I remember I was giving myself permission, literally, kind of a little Bryn Brown type thing, like, I'm just going to give myself permission. This is okay. This is natural. I don't need to rush myself through this.
Yeah.
It is wise for me as an investor who, brings investors into investments. It's important that I'm grounded before I guide people forward. So finding that grounding and ensuring that grounding for myself means that my investors, who are like, that is why I do what I do, 1,000,000%. The only reason I do what I do is because I want to support people in growing their their financial well-being and health. And so it's like, okay, if I'm not healthy, I can't guide them. So let me get myself grounded, give myself permission to do this, identify that. And now I can go back and guide them. Now I'm like, I don't know what that was. It was a fun, that's okay.
Yeah.
But it definitely makes for a different thinking. And Tethered Soul, if you are wrestling with any of this, definitely read Tethered Soul. I mean, he's talking about the blocks, what I was reading this morning, and we create so many blocks for ourselves instead of just sitting with it. So I'm proud of myself for sitting with it and just letting it be, because instead of facing that resistance and just resisting it, little Turning Pro style, it's like, we're all going to face resistance. Just embrace the resistance. Just embrace it. Don't resist.
Right.
It is what it is.
Yeah.
It's not going to be forever.
Yeah, exactly. That's exactly. It's not going to be forever. And I love that you brought up health, because you preempted my next question, which was going to be around, like, what does health mean to you, and what does that look like to you, like in terms of health?
Yeah, that's a really critical question, because why should we invest? Why should we try to build this life that's worth, like, what is a life worth living if you're not healthy? But that health has to transcend your physical well-being. And so I'm a physically vibrant, middle-aged woman and everything, but am I internally healthy? Am I emotionally healthy? Am I emotionally grounded? And so, so often we want to separate physical from, our emotional, spiritual well-being. And it really is like, if you really want to experience the richness and fullness of life, you have to have all elements healthy. And that means slowing down. Earlier this summer, I had a good friend reach out to me. Hey, we're going to be in your area. We want, can we come stay? They've stayed with us before. And we're in the middle of a remodel. I have a lot of things going on. There was just so much going on. I couldn't wrap my head around. Normally I'm a spontaneous last minute, but I was, looking at, okay, no, I need to preserve my health. I need to keep harmony. I need to, and I said, I love you. I'm in a position right now where I can't. And so that's a health position, right? And maintaining that health.
Yeah. Yeah. Oh, so yeah, it's really everything. I'm so glad you brought that up because it does transcend physical wellness, and that's obviously like a really big piece, but being able to set the boundary, especially with people, setting
It's so
boundaries with
hard.
people, that's so hard because it's like that fear comes up again, like what if they
Totally.
hate me, and what if they'll, like all of those little stories come back in, and yet like if we don't honor our own boundaries, like if we don't do that for ourselves, no one's going to do it for us. Like no one can read our minds to think like, oh, maybe that's a lot for them right now. We love you so much, we want to see you, and so it's a big thing. I think it's really challenging. It's challenging for us to say no to someone else, but in doing so we're saying yes to ourselves, which is actually like the more important person, especially in times of somewhat duress, right? Like a home under remodel, like I'm sorry, like you can't even come over
It's a
for
lot.
dinner. Like, it's a lot.
It's a lot. And it always takes longer than I always plan for that. I've done it a few times now, but I'm like, this time is different. And just like so really I'm experiencing my own, economic cycle, my own bear market in my home. And it really, those things translate. And so I'm going to encourage people, little homework for you is find those spaces in life where you're experiencing friction and look how you're thriving in it or not. I've had my ups and downs, and I literally have told my husband, like, I was at my breaking point because I've been pushing hard in my business. I was at my breaking point, and now I feel like I am broken. And to allow myself that space to speak the truth that's within me, to tell somebody what that is so that I'm not alone. And I've actually said that to a couple of close friends, like, hey, I just need you to know, like, I'm in this weird spot, And so for 2 weeks, I'm in this like weird spot of how do I navigate this? But I know better than to navigate it alone,
Right.
because I did that. And that put me in a very dark, suicidal path in my early 20s. So it's like, you learn, like, or I learned, like, okay, that's not healthy. That's not how I ever want to be again. I'll be forthright and own this and own what this looks like. And then you move on. Move on, but you can use everything that I'm learning from the house can be translated into, how you invest, how you go about everything.
Yep. Yeah. Everything's like a lesson that we can bring forward if we go find like the gift, right? The gift in the thing that was also such a challenge. And so, well, I have one last question for you. And that is, what does wealth mean to you?
Wealth is the richness of life. So it's not defined by dollars or cents. And we've assigned that value. That's a value that we as a culture have assigned so that we can make ourselves feel better, or we can label. It's so much easier. And that's our alligator brain. That's just how it is. So, our old alligator brain just wants to find the easy path out. And so I'd like to step away from saying, is it money? Is it this monetary? Is it currency that can be traded? Is that the commodity? But to me, the actual wealth is full relationships and contribution to the world. So great. How are your relationships with your partner and with the people that you say you love so much? Because so often we toss that around. I hear people say their quote, why is their family all the time. And it's like, if your why is your family, then show me how that translates in your day to day. I want to see your why in action. So I push back on that particular why. So it's like, that wealth is, okay, I have harmony in my relationships. That does not mean perfection. It doesn't mean there isn't any friction. There should be friction. At the moment there's not friction in a relationship, I think there's a problem, because you should be spurring each other on, in my opinion. It could just be me. but and then that contribution to the world. We were not designed and created to be here in this world, walking this segment of the timeline on history, going back full circle, to just simply be complacent, enjoying the amazing cocktails my husband makes and beautiful sunsets over the mountain range that I have a panoramic view of. Like, there's more to life than just me and my little nest that I have. So That to me is wealth.
Mm. Oh, that's so beautiful. It's huge, actually, as I think about it. It's personal, and it's also an invitation to everyone to really think about that wealth as, I guess, like a wealth of potential, of like your inner potential, like you said, like, yeah, enjoying that cocktail and enjoying the view. What if wealth was an exploration of our potential? And I love living in that place. Like, what else can I do? What more is there? And there's always more, which is actually the thing that I've learned for myself, that I used to think it was bad to want more. Like, there's something about wanting more that was not okay for me. And now I really embrace it when I think I do want more, whatever that is. It can be anything, just in general.
And it can be money.
Yeah,
I'm not afraid of money.
Why not?
I like money.
I like money.
I like the things that money can bring into life. Okay.
100%.
And it brings ease. Okay.
Yes.
So let's just,
that
money isn't a great thing at all. But when I think of the overarching wealth, that's definitely it. And that, I love how you're talking about that potential. When we redefine with my definition of wealth, it's untapped. It's always evolving, which means life is a continual evolution, this adventure of what's next. I mean, you've written a book, you have a podcast, you have a mastermind community, you have, right? Like, that's what happens when we're pursuing contribution.
Yes.
We're constantly giving and we're evolving. To me, does it get any richer than that?
No, it doesn't. It just keeps growing. Yeah, you're right. There's the what more. And then it's like bringing more people into the fold. And then that creates that abundance of people and relationships and community. And so then we're there. And then we're always in it. Yeah. I feel like we could have like a whole 2-3 hour big spiritual conversation. Now, I feel like we did like a Maslow's hierarchy of needs type of a triangle. We just got to the top, and we need to go up into the rest of the downward, like the whole spiritual upside down triangle that Maslow actually went into. But anyways, we can have that conversation next time. Thank you so much for coming. I've such enjoyed this conversation with you.
Likewise.
Appreciate you so much. It's so great to know that you're out there doing what you're doing, and really caring about and educating and trying to build the confidence in your investors so that they have that going forward in everything that they do. So thank you for everything that you bring to the world and everything that you're doing.
Oh, thank you. And those listening, you should definitely listen to Adapia. She rocks it. She's over on the Conscious Investor podcast. We had a whole, if you like this conversation, you'll love that conversation.
Yes. Yes. Awesome. Thank you so much.
Thank you.
Thanks for tuning in to Real Wealth, Real Health. We hope that you've enjoyed today's episode and found it both informative and insightful. We welcome all your questions and your feedback about today's episode, and especially we welcome your questions about specific topics that you would like us to cover. So shoot us an email at podcast@alphai.com. And if you have a moment, we really appreciate ratings and reviews, as it helps us grow our online community and our interactions with you. And we'll also be linking to a number of relevant articles on topics that we might have touched on during our conversations. Some of them are broad, some of them are technical, but we're always aiming to provide information that helps you better understand the mechanics of building this healthy financial foundation, especially if you're looking to do this with real estate.